Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading for law. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer on this Thursday, July 2nd. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the traders, there was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital. and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is your trade, and what does your trade look like? There are 2 types of trades: retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going into this week is 3% as usual. All right, mental check-in. Aside from a little pains here and there because of Mother Nature, I'm Gucci, I'm good. Excited to see what price action has in store for us. Excited to continue to grow on this NFP Thursday. Last trading day of the week for us here. Woo! It's been a good week so far. It's been a short week, but very good week. I accept any risk that comes to trading today. I understand that trading comes with real risk and that losing is part of the battle, right? It's the only thing promised to us. News, like I said, it's Thursday, July 2nd. All right, we had NFP come out at 8:30. We have medium impact news coming out at 10 and another one at 10:30 and 4:30. So we have news today, okay, making it an optimal day to take a trade. That's the first thing that we look at, is the economic calendar. If there's no medium to high impact news, then it's not optimal day to take a trade. The only time we take a trade when there's no news, all right, is on NFP Mondays, which today was, right? As you can see, Monday here we had no news, but we still took a trade on that day because it was NFP, okay? That's the only time we take a trade on Mondays without requiring news, okay? All right. Risk going into today, we're still at 0.25 of account size. We're not there yet to increase it. Let's see how this month goes, and maybe we'll increase it after this month. But for now, we're still at 0.25 of account size, and we have a max of 0.75 per account per day. Weekly program going into this week has been established as a buy program. Okay, let's go ahead and review price action overnight to see if anything has happened to change our weekly program here at I'm the Trader Capital. Ooh, I'm about to dive in. Bear me, everything is just slow here. Everything is just slow. Even the phone right now is just being slow. Just slow. Everything just slow. Okay, back into the daily inefficiency here that we talked about yesterday. Nothing's really happened in price to change our weekly program. Okay, for our weekly program to flip, right, with price we need to come back all the way down here and take Monday's range low, which it hasn't. Okay, so we're electing to stick with being in a buy program going into the remainder of this week, which is the last day of the week anyway. Yeah, so nothing's changed there. Let's see. 20-day is still good. It's been like that for a minute. After today though, it will be adjusting, I believe. Yeah, it will be adjusting to this high right here. Anyway, let's get previous day in there. If you're using previous day to establish your step 1 condition in a 3-step trading process, as you can see, you would have taken previous day's low here. Okay, so you'd be coming into today in a sell program, which is going against your weekly, right? Because we've taken previous lows, so you'd be anticipating price to continue in direction in which it has taken, right? So if you're using previous day's range to determine your condition, right, you'd be in a sell program going to this morning. But for me, I like current price action to tell me currently what it wants to do, innit? So, but there ain't nothing wrong if you want to use previous day's range, right? Just a higher time frame range. Let's see the effects of NFP today. Not much really. I would be expecting more from it. Cool. Step 1, condition, determine bias. In order for us to do that here, well, how I do it, like I said, if you want to use previous day's range, we would have taken previous day's low already, and you already would have established a step 1 condition. But for me, I use current price action from 12 a.m. to current price action. Note the lowest low. Which is currently London's low. To highest high. That gives me the range. That will give me today's condition for the day. So whichever size gets taken, all right, will establish my step 1 condition, my bias. Dealing range. That's the range I'm dealing in for today. Why does it look like it's off? What's the low? Let me click this. 827. What's the low of this candle? 827. Okay. Set an alert real quick. What it do, Matt? 1 second. This is the range I'm dealing in for today. This is the range that will determine my condition, my step 1, my bias. And I know key liquidity is above and below the range, all right, as potential draws on liquidity once a side gets taken, right? So if buy sides gets taken right now, all right, it will establish a buy program, and I'll be anticipating price to draw to, what high is this? This is a lunch session. Is it lunch? Yes, lunch session buy side. Is it lunch? Not. Yeah, no, it's AM session buy side actually. Sorry. Yesterday's AM session buy side. Above that, we have London, which we left open yesterday. We have London session buy side. And above that, we actually have yesterday's dealing range buy side. We're going to establish that as what it is. I need a fat line. I need a fat line. And I need it to be blue because we can't see this. Can't see the colors with the glasses on. Everything is just so slow. And then we have previous daily high above price, okay? Below dealing range, bear with me. I got no time right now because everything is just slow. Bloody hell. I can't work like this. Hey, welcome, welcome. I can't work like this. It's so slow right now. Oh my goodness. Bear with me. Ding, 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 ding. 9:30 kickoff. Look at that open range gap. I don't like that at all. I don't like that at all, mate. I will most definitely be waiting till post open range to anticipate anything if I do take anything. Yeah, me not like that. Me not like that open range. That's ugly stuff, bro. Oh, mate. I don't like that open range. Anyway, let's get the numbers. What's the open of this price? Of this candle open is 7550. The low of this thing right here. This is how you want to end the week? Bloody hell, mate. Me not like this at all, mate. 36 1 20. Hold on, let me do some quick math. Uno momento. Well, I mean, at least now I can tell it's below price. Okay, so we gapped up. Not really a good gap up, but anyway, it was what was the open of this candle? 75.50, and we're saying the low here is 61.25. So 71.50 minus 61.25. We're looking at 14 handles there. Yesterday was 26. It was decent price. 14 handles today. Let's see. I don't like it though. I don't like that gap. That just really just messed up my whole vibe for today. It messed up the whole vibe for today. Right now, I'm not eager to get into any price action just because based on that open range gap, right? Doesn't make it optimal day for me right now. I'm still collecting data on the number. Right now, I'm just going based on the size that I'm seeing. Damn, NFP, this how you want to do me? This how you want to do me on the last trading day of the week? You want me to get nothing, huh? Alright, so we're waiting for step one. Right now, I'm a bit thrown off. But like I said, I'm not in a rush to get into anything. I'm probably gonna let open range just go without me, and I'll wait for post 10 o'clock, post open range to maybe anticipate something. Time and price. I don't like what I'm seeing right now, so for me to get into anything right now, I'll have to slap me in the face. I'm watching this V-shape retracement set up here. Nothing I'll engage in though, but yeah. Yeah. What an ugly start to the last day of the week here. What an ugly start. Right now, based on this current price action and what I'm seeing, I do anticipate buy side to get taken unless we come back below previous daily low. If we come back below previous daily low, alright, then it'll be dealing range sell side. I'll be anticipating to get taken. But right now, my drawn liquidity is dealing range buy side up here. So I'm seeing how price gravitate towards that. Crazy. Hey, if I don't take a trade today, then I don't take a trade today, right? Day trading isn't everyday trading, right? It isn't everyday trading. Just making sure I'm on the right account if I do take a trade. But right now, I'm not enticed. I'm so happy that I've got to this point, right? Now I know like when to trade and when not to take a trade, when not to push it, right? Because before I would be trying to get in and I'll be taking losses and wondering why am I taking losses. You know what I mean? It's about knowing when to trade and when not to trade. And for me, I determine when to trade, right? The economic calendar tells me what days I need to trade. I'm looking for medium to high impact news on the day, right? Makes it an optimal day. Medium or high impact. We don't need to have both. One or the other. If it has both, great. If it has one, great. If it doesn't have any, unless it's a Monday over NFP, then we don't take a trade, right? I use Econoday as my Econoday as my main economic calendar for futures, and my backup to see ahead of the week is Forest Factory. So this is what determines when I'll be taking a trade. This plus opening range gap now, right? So it's news plus the gap at 9:30. Get back to what I'm doing. That lets me know, yes, it's an optimal day for me to take a trade. Yes, we have news today. However, looking at that opening range gap here, this little gray box here, this is from where we closed at 4:15 yesterday to 9:15 to 9:30 today. I don't like that gap. I want to see a decent size gap. But that's a tiny whiny. Price action is gonna be ugly, man. On a higher time frame though, it'll probably give you some clean setups. But for me right now, yikes. Like I said, we go back below previous daily low, I'll be looking for a draw to dealing range sell side. What is that? What high is that? That's lunch session buy side there. Okay. I didn't take any trade PM session, and it wasn't really, there wasn't any clean. There was a few here and there, but it wasn't like super duper clean. So I'm happy I stayed away. Just got my one winning trade for the morning, and that was it. What is that? Advanced setting. Use low latency toggle on the advanced setting menu to disable low latency mode. Bear with me, bro. Bear with me. Can I do that right now while I'm on that thing? I don't even know. equals less CPC. What the fuck does that even mean? What the hell does that even mean, bro? Like, what? Oh, let me go to advanced here. I don't know if that helped, but I changed something, so let's see if that helps. Numbers on the left hand side, that's the price. That's the price level. And at the bottom we have time. It's like a line graph, right? Like a line graph. X and Y axis. We have the price and we have time at the bottom. So this is the price level where this asset is currently at. And we basically trade a time and price theory. So we look at time and then we look at the sidebar, the price, where price is at. We have key levels, all right, which is like liquidity levels, highs and lows. Will make more sense the more times you show up. So depending on the time and where price is at, all right, will let us know where the candlesticks is going potentially. So the numbers here is price. Is the price level of the asset class. And down here is the time. So just think about a line graph with the X and Y axis. Okay, I did that. I did what it was telling me to do. I need to figure this thing out, you know, because it's mad annoying. Wait until 10 o'clock, all right? Wait until 10 o'clock to anticipate something. Waiting for open range to complete. Right now, nothing intrigues me here. The only thing I saw would have been this retracement set up here, but even that in itself There's no inefficiency in this displacement leg here, so it's not even a clean one. Oh, but hold on though. Hold high. Yeah, still nothing really. It's not even clean. It's not clean. Especially on this day with this open range gap, I want something super duper clean. I'm kind of happy that today's the last day because I know this thing's gonna get worse. Why, Mother Nature, why? So far, so good. I don't want to talk about it too much and jinx it and then start kicking me in the butt. But I couldn't even get a good night's sleep last night. So uncomfortable. Sometimes being a female sucks. It sucks. It sucks. Open range buy side. Did I set this alert? I've not seen. Oh, I did set the alert. Not open range. Dealing range buy side is in the crosshairs. If we don't get there before 10 o'clock, before open range buy side presents itself. $9.50 macro kicking off. Do they? For beginners, I'll recommend this guy. He's not for beginners though, but he's the only guy I would recommend. Hold on. This is who I learned from. I wouldn't really say he's for beginners, but he's the best one to learn from. Just take your time. Take your time. Watch, he's got a lot of content though. He's got a lot of content. This shit is slow. Oh my goodness. You're not a dummy, mate. You're not a dummy. You're not a dummy. This is the guy though. This is who I would recommend. This is the only person I would recommend. Not really for beginners, but this is what I recommend. The inner circle trader, the one and only. This is my mentor right here. The mentor of your mentor. Is it 10 o'clock yet? But it's gonna take time. It's gonna take time because obviously you don't know much. It's gonna take time. I was the same way when I started. You just basically just need to know what a candlestick is, pretty much, and that's pretty much it. So I would research what's a candlestick, learn about candlesticks, and then the rest is cakewalk. But first, also you have to determine what kind of trader are you going to be. What kind of trader are you going to be? Do you want to be, are you the type of person that makes decision fast? Are you the type of person that takes time to make a decision? Right? Because if you can make a decision fast, you can short-term trade and you can day trade. And you can also scout. But if it takes you some time to make decision, right? Then short-term trading, maybe swing trading, which I wouldn't personally recommend, but that would be the type of trader that you want to be. Just basically depends on your personality. Do you tend to overthink? Change your mind pretty quickly? We can do a quick run of a candlestick right now. Let's do it. Nothing's happening right now. We've got 4 minutes until 10 o'clock. Price, like I said, is drawing to dealing range buy side here. All right, we never came below previous daily low, which is when, if we come back below previous daily low, then if this then that, right, I would be anticipating a draw to open range sell side, but we never came back below previous daily low. So my premise was still intact, right? But we're gonna do a quick rundown of what a candlestick is right now. Right now. Let's do it. I think I have it here. Hold on, bear with me. You change your mind pretty quickly. Okay. All right. So you'd be looking at maybe instead of this lower time frame, well, 1 minute and 15 seconds, maybe you'd be looking at 15-minute, 5-minute, 15-minute, 1 hour. All right, a higher time frame. So it takes some time for your setup to form. But once it forms, right, there's not much that can happen to change your mind. So instead of the lower time frame like what I'm currently on, I currently trade off the 15 seconds and the 1 minute, right? For you, if you change your mind pretty quickly, because a lot happens on a lower time frame, right? So your mind will be like all over the place. You might want to look at a higher time frame, right? Like the 15-minute, the 1 hour, and the lowest you go will be paid maybe 5 minutes. So it would be 5, 15, 1 hour. Still would be the same setups, right? So that's good. That's good that you know that. That means you can't trade on these lower time frames. Well, not yet anyway. You can build up to that, right? But for now, for you, I would recommend starting with the time for these 3 time frames: 5 minute, 15 minutes, and the 1 hour. Bear me 1 second though. I'm trying to get this thing. It wouldn't be here. It wouldn't be on this one. It wouldn't be on this one. I think it would be on the process part. Yep. Uno momento, por favor. We're about to learn about candlesticks right now. We go into the basics. No. This thing is so slow. It's so annoying. Oh my God. I'm so annoyed. So just write down 5-minute, 15-minute, and 1 hour. While we wait for this thing to load up, it's about to be 10 o'clock. This is crazy. This is crazy stuff here. Computer, man. Come on, man. Don't do me like this. I don't know if it's the computer. I don't know if it's the internet. I just don't know what the problem is. Oh, man. It definitely takes time. Definitely takes time and practice for sure. You just have to keep showing up here. Eventually, it will all click. It will all start to click. I'm so sorry. It's done, man. Oh, we're moving. We like this. Okay. It said, I need a break. You've been using your... This is the worst trader right now. Okay, about to dive into caps. I didn't forget. Boom. Unless it slaps me in the face. This is high. Oh my goodness. This is the thing. This frustrates me more than anything. This is the most frustrating whole of it. Like, what are you doing? We just frozen. We just frozen here. We're obviously taking open range buy side. Taking open range buy side. Please bear with me and my slow computer. This is ridiculous. I'm annoyed. I'm trying not to get annoyed, but I'm getting annoyed. If you lose me, okay, that's it. I'm not coming back. I'd rather preserve my sanity here. I'd rather preserve my sanity. Let me know if you lose me though. Because right now I'm about to lose me. Can we get back to normal, please? I will stop doing other stuff. This is crazy, man. Even if a setup is happening right now, there's nothing I can do about it. All right, we're taking open range buy side, confirm the session program as a buy program. We haven't got a daily program yet though. In line with our weekly. Do we take that low? What's the low of this? 228. Oh, we're definitely taking it now. Taking this low, below external liquidity. Market structure shift back above here. I'd be interested in a continuation buy, but it has to be with the body close above that. Could also argue that this could be a potential V-shape retracement. If it does give it to me there, I will take it. I don't know if I'm about to OD it, but I just got this shit working. Hold on. Yeah. V-shape retracement. We're gonna let it go though. This is how typically when you go onto the chart, it's usually a red and a green candlesticks, but obviously you can adjust it. For me, obviously, my up close candles are blue and my down close candles are white. This is not for me right here. So this is the anatomy of a candlestick. We have two types of candlesticks, right? We have an up close candlestick, which is the green one. For me, on my charts, is the blue ones that you see, all right? And my down close candlesticks, the red one here, is the white one for me. Obviously, you can adjust the colors to whatever your color coding you want it to be, right? If you want it to be pink, you can let it be pink. Just depends on your style, right? That's where you kind of bring your own personality into the trade, into your trading. So typically, for an up close candle, all right, oh, I wish I could have like a drawing thing on here that I could draw. It typically opens at the bottom here where the open is, right? It trades down to the low, right? We get the wick. This thick line that you see that says low is the wick. This is the candlestick body. It closes up here, all right? Opens down here, closes up here. It goes all the way up here, comes back down and closes here, all right? This is the high, the wick, and the low wick, and then the body closes up here. And then on the other side, down close candle, opens up here, goes higher, creates a wick high here, comes all the way down here, creates the low, and closes up here. Let's just, well, I'll have that here for reference, but let me do it on here with my candlesticks. Where I can draw. Because we taking it to the... So the same illustration, we're going to look at these two candlesticks here. We're going to look at this candlestick. Bloody hell. I think the brush will be better. But let me change the color of the brush. To a brighter color. Does it let me do that though? I guess not. Let's go back here. Does that even let me change the color? Nope, it's set in stony. Bloody hell. Anyway, same thing here. This blue one, this blue is my up close candle. All right, it opened down here. Traded all the way down here, created that wick low, right? Came back up, then we created the body. Traded all the way back up here to create that wick high. The wick high is actually all the way up here. All right, and then it came down and it closed here. This is so aggy. This is so aggy. Hold on a minute. Oh, let me not lock that. I truly believe that the brush would be much better. Right now, there's nothing for me to do, so I'm not missing anything in the price action. I'll have to wait till post 10:30 anyway, so we have time. We have time to get intimate with these candlesticks. Oh, I'm trying to delete. So we can understand the anatomy of a candlesticks. Delete. 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 Let's use this. So we're doing this up close candle right here. It opened here. That's the open. It trades down. Then we get a body. Goes all the way up here. Then this is the close of an up close candle. Pretty simple stuff. Pretty simple stuff. For a down close now, it opens at the high. For this one particularly, this white one, that's my down close candle. It opened here. Traded up. Then it created this body. Not yet, it's still be awake. It came down. Then we closed back up here. I'm not sure if that's making any sense. Let me know if it's not making any sense. You're like, Alice, what the fuck are you talking about? Alice, what the fuck are you even saying? I'm still not understanding what the hell you're saying. The chart is in the way? Oh. Sorry, my fault. But like, what are you talking about? I can't even see, mate. I can't even see, mate. Hold on. Oh, that's so funny. So just move it more this way. So right now I'm on the 15-minute time frame. So each candle here represents 15 minutes of price action, right? 15 minutes each. There's obviously different time frames up here. You can choose whatever time frame. For you, you would be looking at the 5, 15, and 1 minute because you tend to change your mind pretty often. Okay, so you don't want to be on a lower time frame where a lot is happening and you're like, your mind is like, ah, you know. You want stable, slow price action where it takes a decent amount of time for something to happen, all right, for you to change your mind. Okay, so this is a 15-minute time frame. Each candle, like I said, represents 15 minutes. All right, so this is 15 minute, this is 15 minute, this is 15 minute. Obviously, we have time at the bottom here and price on the side. So for me personally, I think when you initially open a chart trading view, what you see here, the red and green, is typically what the colors are. All right, but obviously you can change that to your personality. Class is in session, most definitely. We in session today. Why in the back come to the front? So, candlestick anatomy, right? Personally, on here, if you're looking at my chart, all right, my up close candles are the blue ones, and my down close candles are the white ones, right? Up close means it closed higher than where it opened, right? It closed higher than where it opened. If you look at the diagram, for the green, right, is the green. It opened down here and it closed up here. That's typically what up close candle is, and the wicks are just how high and how low the price traded. The green, the thickness is the body, right? We have the body and we have the wick. The high and lows are the wicks. The open and the close is the body of the candlestick, right? So an up close candle, typically it closes higher than where it opens, and a down close candle closes lower than where it opened. I don't know if that makes any sense, any sort of sense. So for this down close candle here, this white one that we're looking at right here, this is the white one. It opened here. This was the open of that candle. I don't know why this thing is so difficult to draw with. I just don't understand. Oh, I can change the color. Oh, hold on a minute. Let me delete that. I'm gonna use the highlighter because it's just easier to draw with. So we're watching this candle. I wonder if it lets me, yeah, it does let me change. What color would be good to see with this? Well, let's go red. Why is it not changing though? Bloody hell. Come on, man. Let's make it smaller a little bit. It's too fat right now. Oh, it just can't get bright, really and truly. It doesn't even matter what color it is. Let me see how it looks on here. Yeah, I don't like that. We opened here. It traded higher. Traded all the way down here, created a low, and then it came back to close here. So it opened here and it closed lower than where it opened. Unlike an up close candle, right? We opened down here. And we closed higher than where we opened. That's typically, yeah. If it doesn't, I'll go over it some more. All right, it will start to make sense. As you can see, this candlestick that's forming right now in this present moment, right now it's got 8 minutes left to close, right? Right now is potentially could close as a down close candle, right? It opened here, traded a little bit higher to create the high, the wick high. As you can see from the diagram, we're watching it happen in real life, right? Now it's creating the body. It's creating the body of the candlesticks. Let me delete all this stuff. We can look at a 1 minute candlestick because that will have obviously less time on it. Let's go to a 1 minute candlestick, because that will obviously form quickly, so we don't have to wait a whole 8 minutes to see how that candlestick closed. Eight minutes until I can actually partake in the market here, so we got time. We got time to watch these candlesticks print real life. All right, so we're looking at the current candlestick right now, which is this one right here, 1022 candlesticks. Obviously, you won't know what kind of candlestick is going to be until the candlestick closes, and this candlestick currently now has less than 25 seconds left in it for it to close. Right now it's looking like a down close candle. It opened here, all right? If you close below where it opened, obviously it's a down close candle, but if you close higher than where it opened, it's an up close candle. Trying to make sure that it's big and it's obvious. All right, as you can see, it just closed. Where did it close? It opened down here. It closed higher than where it opened. So when it was forming, it looked like it could be a potential down close candle, but it closed higher than where it opened, all right, making it an up close candle. And that's basically, once you understand the formation of a candlesticks, the rest is pretty much easy. It's pretty much easy. Obviously, this is a 1 minute time frame. So each candlestick here represents 1 minute, right? There's different time frames. If you go on the daily time frame, each candle here represents 1 full day of trading. 1 full day of trading, right? This is an up close day. This is a down close day. We opened here and we closed way below where we opened. This day here, we opened here, we closed above where we opened, making an up close candle, right? Currently, this is today's candlestick, all right? It's still in formation, right? It's still in formation, so we don't know whether it's going to be an up close candle or down close candle until the day finishes in about 6 hours 35 minutes. That's how on the side here it tells you. It tells you how long left each candle has left to complete. Obviously, then we have a 4-hour candle. Each candlestick here represents 4 hours, and so on and so forth. Yeah, so we have two types of candlesticks, right? We have an up close candlesticks and we have a down close candlestick. The color is not very relevant, obviously, because you can change the color. Because this is the color scheme that, you know, fits me. I like. It goes with my theme of what I got going on here. And the main difference is that where an up close candle, right? The close is higher than the open. The close of that candle is higher than the open. And for a down close candle, the close is lower than the open. Right now, this candlestick right here has got 35 seconds left in it, less than 35 seconds. It opened here. It opened right here, traded up. Right now it's creating the body. Could potentially be creating the low wick too. But it's not complete yet. It's not complete yet. Still got 13 seconds now. 10. 5 seconds. We're creating the low here on the wick. Okay, and it closed lower than where it opened. This thing is so aggy. Mother sec, that's not what I want. It opened here and closed here, right? The open, where it opened, it closed lower than that, so made it a bearish candlestick, right? Bearish and bullish. Up close is a bullish candle. Down close is a bearish candle. That's also another terminology, right? And it created the low here and it created the high here. This is called a wick. The high and the low is the wick. This is the candlestick body. This is the body of the candlestick right here. This drawing is atrocious. But I hope it makes sense. I hope that makes sense. Exactly. Just 1% every day. We don't even want 2%. We don't want 3, we don't want 10, we don't want 100%. It's just simply 1%. And just by learning what a candlestick is today, you're 1% better than you were yesterday. And that's how it goes. That 1% compounds. Each and every day, each and every session, it compounds. And in like a month from now, you'll be like, what? This is old news to me. This will be your language. You know? It'll be like learning English. Learning any language is hard in the beginning, right? But once you stay in that language and you continue the education, it gets easy. Trust me, I didn't know none of this shit when I started. Most definitely didn't know none of this shit. So look at that. That was a nice V-shaped retracement setup there. That was my setup post 10 o'clock. Obviously, it wasn't clean. It wasn't clean, specifically exactly at this time for me with that open range gap. So I just let it go and there was nothing wrong with that. We're taking open range, sell side. That session bias has flipped, condition has flipped from a buy program to a sell program. We have less than 2 minutes until I can partake in anything really. So do we know what a candlestick is now? Up close is a bullish candle. Down close is a bearish candle. Up close, all right, the open, what the close is higher than the open. Down close, the close is lower than the open. Oh, you see that 15-minute candle that we were looking at ended up closing bearish, right? Down close candle. This is the body. This is the high wick, the low wick. This is a fat ass body on that candlestick. My setup was up here, but it wasn't too clean for me. It was clean on the 1 minute, but obviously at the time my computer was doing its own thing. So I didn't even get to like watch it happen live, but it is what it is. 10:30. First hour of trading, all right? I'm very specific in terms of when I take a trade, right? It's very time-based, right? The algorithm that runs these candlesticks, it runs on time, all right? Time is the most important thing when it comes to trading. The x-axis down here, that is the most important thing. The best optimal trading times for me personally, due to my data collecting that I found, is post 30s, all right? Like 9:30, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30, and then obviously 4:30, we're done by then anyway. And the macros is the last 10 minutes of the hour to the first 10 minutes of the hour is a 20-minute window, right? It's a 20-minute window. So 9:50 to 10:10, 10:50 to 11:10, 11:50 to 12:10, 12:50 to 1:10, 1:50 to 2:10, 2:50 to 3:10, 450, no, 350, yeah, 350 to 410. Those are macros. First 10 minutes, well, no, last 10 minutes of the hour to the first 10 minutes of the next hour. Okay, it's a 20-minute window. That's pretty much all you need, right? You can trade in 20 minutes and be done. All right, watching this price action here. I need about less than 35 seconds, then I can engage. I need a dollar. A dollar is what I need. This would be the next thing that you need to learn. Swing points. Swing points. It takes 3 candles, right, to form a swing. Oh, hold on. Hold on a minute. Da-da-da. I know it can sound like a lot when you're hearing it for the first time. I definitely understand that. I'm watching this as a continuation sell. Came into trade 2 and 3 excellent liquidity odd low here. Came into an inefficiency, a fair value gap. Market structure shift back below. Targeting demon range sell side here. That was the setup right there. Let's see though. Let's see if it was. Would have given me one contract for -1. We'll save that for another day. We'll just stick to candlestick for today. One thing at a time. leaving this alone. Glad I did so far. Swing points will be the next thing that you need to learn. Swing highs and swing lows. And it takes 3 candles to form a swing high. It takes 3 candles to form a swing low. This right here is a swing low. This candle being the swing low point. As you can see, I don't know if it's clear. Is it clear? Let me adjust it here. A swing low, a low is a swing low if it has a higher low to its right and a higher low to its left. Okay? The low, right, which is the wick part. We're talking about the wick of the candlestick now. We're talking about the wick. Focusing on the wick of the candlestick. Still nothing here for me to do personally. Nothing clean, really. Nothing exciting that I'm willing to put risk behind. We're back below previous day's low. So obviously, drawn liquidity right now is dealing range sell side. Oh shit. If I don't take a trade today, I won't be hurt about it. Swing low has a higher low to the left, a higher low to the right. All right. That's a swing point. That's a swing low, like we see right here on this chart. This candlestick right here, this middle one, it has a higher low to the left. That. And a higher low to the right. Creating a swing point right here. Swing low. 3 candlesticks to create a swing high, 3 candlesticks to create a swing low. Let me go ahead and delete all of this. Yeah, that was clean. That was clean. Still one contract out. Taking dealing range sell side bias for the day has been confirmed as a sell program in line with the session bias. This was clean too, right? Would have still been in there with a stop up there. Would have given you a -1. was clean. -1 right there. Ooh. Okay, okay. Below dealing range, what did we even get any sell sides? No, there was no. Oh. There's this lunch session open range sell side down here. I don't remember getting any sell sides, you know. Swing low, 3 candlestick pattern. Higher low to the right, higher low to the left. Creates a swing low. On the other side now. Swing high. A high is a swing high if it has a lower high on the right side and a lower high on the left side. Bear with me. Same thing, 3 candlesticks pattern. I'll be watching this continuation sell in here. Came into a 1 minute inefficiency. I'm waiting till 10:50 macro though. I'm gonna wait. I'm gonna be patient and not rush into anything down here. Already missed the move up there. Watching this, oh, it's not even a V. Oh, hold on. Because we took sell side here. Below. Da-da-da-ba-ba. Bring it, bring it, bring it, bring it, bring it, bring it down here then. Swing high, swing low. 3 candlestick pattern. Once you understand the anatomy of a candlestick, okay, that's the next thing you need to know. What's a swing high and what's a swing low? And it takes 3 candles to create both. A swing high is a swing with a lower high to the left and a lower high to the right. Right? The middle candle has to have the highest high. Just like a swing low, the middle candle has to have the lowest low in terms of wick, right? When we talk about the anatomy of a candlestick, the high and low is the wicks. The open and close forms the body of a candlestick. Swing high, swing low. $10.50 macro, this is what I was talking about in terms of a macro, all right? $10.50 macro, last 10 minutes on the hour to the first 10 minutes of the next hour. So it'll be 10.50 to 11.10, right? This is my last time frame to anticipate a setup, all right, to engage in it before my morning session finishes. If it doesn't give me anything here, then I would have just not taken any trade today and been okay, right? Nothing wrong with not taking the trade, right? Day trading isn't everyday trading. I can't believe I didn't get any like sell side liquidity. I forgot all about it. We only have this really and truly, and then Monday's low, which will flip our weekly bias if we get there, right? Wait until 10:53. I like to give it, 3 minutes. It's ideal for me on a 15-second time frame anyway, and then 6 minutes on the 1 minute. That's what my data collecting has shown. Has shown to be optimal for me anyway. The anatomy of a candlestick, swing highs and swing lows, is your main focus going into the weekend. That is all you need to be focused on right now. Nothing else. This will be a swing high here. This candle. There's 3 candles that make a swing high. We have this candle here. We have this candle here. And we have this candle here. We have the 10:51. Obviously, this 15 seconds time frame, whatever. 10. This candle 1, 2, 3. All right. Swing high. The middle candle right here, right, has a lower high to the left and a lower high to the right. Okay. The middle candle is always the highest point. Just like the opposite side, the middle candle is always the lowest point. All right. Here is a swing high. What the fudge cake? This right now is a swing low. Oh, we've taken the sell side there. Hold on. Hold on. We have a swing high here. We have a swing low here. Let me delete these. Main focus. It's in the chat. I don't like this displacement legs. Very like, yeah. Very blech. Anything below 8750, we're definitely below 750. We're looking at the bodies here. Now we don't like that. Do nothing, do nothing. Where? What the what? Here's a swing low. Is it a swing low though? Let's confirm. What's the low of this? 775. Nope, it's not a swing low. This will be the swing low. Now we got a new swing low below external liquidity. You can see a body closure though. Chef it up. Chef it up, chef it up. I want to see a body closure here. If it closes with the body below this swing low, I'd be interested in a continuation sell. If not, we're taking sell side here. Want to see the bodies close, want to see the bodies close. Oh, it did give me a body close. It did give me a body close. Hey, come on, man. Why are you playing with me? Bloody hell. It is what it is. Takes me out. We'll confirm a retracement setup. But let me set this up real quick. 5, 5, 2, 5. 5, 2, 5. Continuation sell set up here. Let me adjust the 1 minute here. Oh, we're done. We're out. That was quick. Quick in and out, bruv. Quick in and out. Chef it up. All right, let's see the outcome of that trade. That's probably the last trade I'm going to take for the remainder of the week. That's it. That was it for me. 199. Thank you very much. This account slowly but surely coming out of drawdown. We'll take it. 199. That was a quick trade. We like that. It was a continuation sell set up, right? We took a swing high above external liquidity, right? We came back down, took a swing low below external liquidity, confirmed the continuation sell set up, okay? That's what I said. Swing points are the next thing that you need to learn. Now that you understand the anatomy of a candlestick, swing points are the next thing that you need to understand, right? Because that's pretty much how we frame our setups, okay, on swing points. Okay, short-term swing points. But let's see what else this trade will offer us. We've got negative 1.5 here, heading to negative 2. But that was a quick trade. That was a quick trade. It's like, how many seconds were we in that? Like a minute, literally. We go in there on this candle, 11:02. We're out at 11:03. A minute. Negative 2 smashed here. So this right here, this is, I have two models I trade. I have a continuation model and I have a retracement model. All right. When we go back to the 3-step trading process, right, which step 1 is condition, we determine our bias. Step 2 is stage, right? What sets up your trade and what does it look like? Step 3 is execution. So step 1, condition, all right? We took dealing range, yeah, it's dealing range, sell side, okay? We establish our condition as a sell program for the day, okay? So we're looking to be a seller. Doesn't mean we can't buy, right? When we buy, we understand that we're going against our daily trend, right? So we're in a sell program. We're looking to be sellers, right? Once one side of the dealing range is taken, we can either get into a retracement setup or a continuation setup, right? We're always anticipating a continuation setup to the same side price has taken. Yeah, I feel like I'm not making any sense. But anyway, continuation setup. External liquidity, this is dealing range low. This red dashed line that you see, that's price. Where's time? Time is here, is a macro. We have time here, 1050 macro. Price is here. When time meets price, 1050 macro, when you see a vertical line pop up, and then we have a horizontal line, when they meet, all right, we're looking for certain characteristics around that price level, all right, which tells us whether we're going to be getting into a retracement setup or continuation setup. Look at this trade, still going, sexy stuff. But anyway, as I was saying, we had time, right? 1050 macro, we have time and price. Price is right here. Dealing range low, that's price. X-axis, Y-axis, okay? With this price level now here, price trades above it, we come back below. Let me get a highlighter. We trade above it, we come back below, back above, taking a swing point here, rating a short-term high. This, you can't even see this thing right here. It's so frustrating because you can't even see the thing I'm drawing because the color is just so like, what is that? And the other thing, I don't like the way it draws, but we're gonna have to do it. We're gonna have to do it. Oh, let me get a screenshot for my, hold on. Let's get a quick screenshot first for my journal on the Twitter. As you can see, obviously this trade would have offered me more than what I took out, but obviously at my current trade management, I get what it gives me, and I watch the rest. Later on, okay, when I have more contracts to play with a larger capital, obviously then I can capitalize on these moves. But for now, I'm being content with enough, and that's it. Anyway, I've got my picture now, so let's carry on with this. We have time. This is the price level here. We trade up to it and through it. We come back below. All right, back above, taking this swing point here. Taking this swing high here. All right, so we have a short-term rate above external liquidity. All right, then price comes back low, takes this swing low here, causes a market structure shift back below external liquidity. That is my trigger. That is my go ahead, enter the market. As you can see, that's where I entered the market. When I hover over this thing, it shows you where I entered the market. Oh, I entered it here. Obviously, my limit was set here, but when I hit the trigger, price was up here, so it just tagged me in up here. All right, and for my targets, I use the Fibonacci, which obviously will sound like alien to you. Like, what the fuck is a Fibonacci? What are you talking about, Alice? Speak English, mate. And I go out right here. Entry was here, stop was up here, target right here. Bing bang biggity bosh. We're done for the day. NFP morning destroyed. Took us a while, right? Took us to the end of our session. Really, our session is ending right now at 10:10. Micro is coming to an end. Took us to the end of our session for us to engage in something, which is fine. Nothing wrong with that, right? Patience. Exercise and patience. So this is what I classify as a continuation sell setup. Beautiful stuff. Let her cook. Chefing it up, baby. June was good to me. I think July is going to be great. The rest of the year is going to be great. From now on, life is going to be great. Oh, mate. This is my second trade of the month now. I might take a trade PM session, depending if it's clean or not. It's NFP Thursday. It's the last trading day of the week. I'll see what PM session is saying. Like a motherfucking professional. This was like navigate NFP like a motherfucking professional. At least we took something today, even with that opening range gap, right? I think because it's NFP, that's why price action is super clean. Any other day, I don't think would get this kind of clean price action with that opening range gap. I know from my data that I've collected. But however, because it's NFP, that's why price action is a bit cleaner than it would have been, right? With that, especially with that open range gap. So let's make a note of that, right? We fucking them up this month. We fucking them up all month long. All month long. Slow and steady. Now, I'm not pressed about the amount right now. The outcome of the trade, the amount is not a big factor to me. For me, it's about me following my processes and my procedure and protocols, understanding my setup and engaging when I see it, right? The outcome is out of my hands. Right now, this $199, right? Let's round it up for $200. Could be in the near future, right? It could be 2K, right? With obviously risk management, right? It could be 2K, it could be 20K, it could be 200K. Could be 2 million, because we're getting to the B's. Could be 20 million, could be 200 million, and it could also be $2 fucking billion. All right, that's the goal, right? One trade will be $2 fucking billion. Following the same processes, the same procedures and protocols, everything that I'm looking for right now, just a different capital that I'm trading with, right? So right now, I'm okay. Humble beginnings. Humble bloody beginnings. All right, we all have to have those. We all have to have those. Anyway, session has come to an end, and we're gonna do a trade performance review. Before we do a trade performance review, we're gonna actually review the trades, the potential trades that we looked at today, and then we'll go ahead and do a trade performance review, and then we'll wrap it up for today. Last trading day of the session. I don't know. I'm still debating on whether I'm going to be trading PM session. I'll see what the price action is saying, though. I'll see what the price action is saying. But let's go ahead. Anyway, the anatomy of a candlestick and swing points, swing high and swing low. All right. Once you understand those two things, all right, everything else will become clear. Then it really becomes time and price, and that's pretty much all we need, right? We trade a time and price theory. It will make sense. It's a 3-step trading process that we do here. All right. We go over it every morning. All right. The more you do it, the easier that will get. Hell yeah, 200K trades coming. I cannot wait for those days, you know. Nobody can even talk to me. You can't even talk. I will become unreachable at that point. Right now, I'm at 200 and I'm reachable, okay? At 200K though, Matt, nobody can reach me. I'm sorry. You're going to need to spend some money to talk to me. I'm sorry, but I'm not sorry. I'm sorry, but I'm not sorry. When we get to them 200K trades, what? You're going to need to go through my secretary, my security guard to talk to me then. Anyway, let me stop. You get me hyped over here, man. You get me hyped. Anyway, let's go over the trades, the potential trades that we could have took today. All right, and the one that we did take, and then we'll do a trade performance review and wrap up for this NFP morning. Solid stuff. There's obviously more opportunities I could have took, but I didn't really partake in them because obviously this one in the beginning, my computer was just not. It was just not working with me. Anyway, let's go on the 1 minute. There was another one here that I wanted to talk about as well. Oh, this was pretty much it. Okay, it was clean on the 1 minute there for that one, so we'll talk about it on the 1 minute. We did have with this one here that I was looking at as well on the 15-second continuation using a previous daily low. Coming real soon, man. Coming real soon to a city near you. Golly. Okay, so initially, all right, dealing range, no, neither side of dealing range got taken. However, all right, once opening range was complete, which is 9:30 to 10 o'clock, very specific times, very time based. All right, what I'm looking for is very structured, is very specific in terms of the time frame I'm looking for it. 9:30 to 10 o'clock. All right, that is my opening range. Complete, not my opening range. That is opening range. It completes opening range. It's not mine. It's not mine. It's my mentor's. Okay, I didn't invent it. So, like I said, the only person I would recommend learning from is the Inner Circle Trader, ICT, my mentor. All right, Michael J. Huddiston. It's been slow right now. I don't have time. Let me close up shop. Let's close up shop. Anyway, so 10 o'clock, all right, completed opening range. We had opening range buy side get taken. So our session, all right, opening range determines the session condition. My dealing range determines my daily condition. Okay, so there's different conditions. There's a session condition, there's a daily condition, and there's a weekly condition, and obviously there's a monthly condition, which I don't really pay attention to because I'm a day trader, so I don't really care what the monthly is saying. The weekly, I look at it for my personal use. You don't need it. It helps, right, when you're in line with the weekly program. But for day trading, you don't really need to know what the weekly is saying, but it helps to know it as well, okay? Anyway, but we determined our session condition, all right, step 1, condition determine bias as a buy program because we took buy side, okay? So a swing displacement, a V-shape market structure shift back below, we took this swing low, all right, a V-shape retracement setup, which turned reversal, all right, because we came down and we took opening range sell side, okay? So it can retrace to continue, or once one side of the dealing range is taken, price can retrace to continue in the direction of the side that it took, or it can retrace to a reverse, which we had a retrace to reverse scenario, all right, by taking sell side here, it reversed and it flipped our bias from a buy program to a sell program. Anyway, this was a retracement setup turn reversal. We didn't obviously get to engage in that one because our computer at the time was acting mad slow and just nothing was even loading at the time. which is fine. Nothing wrong with it. It was still nice to have seen it after the fact, right? It's just more data collected for me with more confidence in terms of what I'm looking for. V shape is there, all right? It's straight down closed candles to that market structure shift. Perfect. So up there. Didn't engage in it. That's fine. After we took open range sell side, confirmed our bias as a sell program, okay? At this point, we still hadn't taken either side of dealing range yet, all right? We're just going purely based on the session condition, right? Here we had the continuation sell setup, all right? After 1033, we trade back below a previous daily low, back up into inefficiency, all right? For my continuation setup, is either inefficiency and or liquidity, all right? My stop would have been up here at this swing high. Okay, so when price came back up in here, okay, we still would have been in this setup here, okay? I wasn't really 100% on this setup, really and truly. For 15-second inefficiency setups, it's really tough for me because I've been burnt on, it's like 60-40. 60, it will fail, 40% it would be in my favor, and that's not a probability I like too much, all right? But when we took buy side here, when we took this swing high above it, all right, when we took this swing high above it here, come on, man, I'm ending now. And then we came to take a market structure shift back below. You could have used this one too, but I prefer this one. This also confirmed a continuation sell setup here. So even if I wasn't confident in this and just using the inefficiency here alone, when we took structure here, came back down, all right, also confirmed a continuation sell setup, which all doing its own thing. And obviously we also had time too because we was post 1030. Once these, obviously these are indicators, right? These are my own indicators that I coded myself, right? I can get it to you when you're ready for trading view. I can get it to you when you're trading. It gives me my time and price, which is the only thing that I use really to trade in, right? Time and price indicators. Just really plots out the time. Once you see a time plotted, okay, then you're just waiting for price, and we're waiting for a certain characteristic around that price level, all right, to engage in. Anyway, 1050, this is the trade that we did take though. 1050 macro here, all right, 1050 macro here. We took dealing range sell side, so we confirmed our daily condition as a sell program in line with our session program, going against our weekly though, all right, going against the weekly. Be aware of that, right? It's always good to be aware of it. Trade up to and through external liquidity, back below. We took a short-term high above external liquidity, dealing range sell side, market structure shift, swing, market structure shift back below, confirming a continuation setup. This setup here that I engaged in and this setup is the same setup, right? External liquidity, we took structure above it, market structure shift back below. Your stop would be above this swing high, and as you can see, when price came back in here and gave us another opportunity, it still wouldn't have taken you out yet, okay? And that was pretty much it. That was pretty much it. Another one here, but wouldn't have given you an entry, nor do we have time, okay? 11:10 right here. This is when you stop looking for entries, okay? And that was it for today, all right? That was it for today. That was it for today. Solid day, solid morning session, solid NFP morning session. Trade performance review though. Let's get on with it. What I did well today is that I showed up, all right? I got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Showed up today, stuck to my procedures, my protocols, my processes. I followed my model and didn't deviate from it. I'm very happy and pleased with my performance today. I very much exercised patience because it wasn't until the ending of the session where I was like, you know what? We have time, we have price, it's clean, let's do it. It's NFP morning. Now that I know that NFP mornings, open range gap is really not that much of a factor, okay? Obviously, something that I obviously need to collect more data on, but based on today alone, and obviously I'm not going to base on just one day of data, right? I need to obviously collect more data on NFPs and pay attention to the open range gap on NFPs, all right? Where I fell short today would be my wake up time. Like I said, on these weeks when, you know, it's that time of the month, I tend to give myself a little bit grace. It's harder for me to sleep. It's hard for me to wake up. So where I fall short today would be my wake up time. I'm just making it. There's not an excuse. It's just a reason as to why I woke up late and didn't get my morning routine in. Chart wise, I showed up right and followed my procedures and protocols and didn't deviate from it. So only thing I felt short today would be wake up time and morning routine. Other than that, solid morning for me here. How I can improve for next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. I think I got a solid foundation in terms of what I'm looking for in price of my processes, right? And I just need to continue to exercise my discipline muscle in showing up and just sticking to what I'm looking for and letting the outcome be out of my hands, right? Whether it's a loss or win, it doesn't matter because I'm looking for the same thing. I'm doing the same thing over and over and over again. Successful trading is boring, all right? It's like your regular job. Once you get a job and you get trained on the job and you know what you're doing the same thing every day, right? Obviously, the days may be different, the interactions may be different, but the core essential of the job is the same. And that's the same principle that you need to take to into your trading, right? You know exactly what you're doing each and every day. Yes, the market conditions can be different, the charts can be different, but what you're looking for doesn't change, right? Doesn't change. The core foundation of what you're doing, it doesn't change, and that's what builds that consistency. That's build that repeatable process that you can continuously do, right? That's how you can scale your trading as well. Okay, that's how we're gonna get to those 200K trades, right? Right now we're at $200, but the goal obviously is to increase that as we build more experience and obviously get more capital. Let's look at what our schedule is looking like next week. What our tentative schedule is looking like next week. Oh, sugar, honey, iced tea. Monday, trading day. Wednesday, trading day. Thursday, trading day. So far, Tuesday and Friday, we will need to see what Econoday is saying. We have one stage FOMC next week. We'll need to see what Econoday is saying next week, obviously. This is what this is my main economic calendar. This is what I really use, right? And this is just my backup to see ahead because on Econoday, it only gives you the week of during the week of, right? You can only see that on the week of. So this is our tentative schedule for next week, all right? Looking like a 3-day trading week, but obviously we still don't know what Econoday will be saying on Tuesday and Friday. But for now, this is what our schedule is looking like next week. Remember, we're looking for days with high to medium impact news. All right, those will be our optimal trading days. If we don't have any news, we don't trade really. You can have a separate account for those days, but for me personally, if you have 2 years, less than 2 years of experience, I wouldn't take any trades on a day with no high to medium impact news. Okay, so this is our tentative schedule for next week. Once again, closing an amazing week in the market of just pure consistency. I'm starting to really see the results of my 1% each and every day since I've started like just recording my live trading since, well, it's been like over 2 years now of doing the same thing over and over and again. We're finally got to that and going through that process of refinement and adjusting. We're finally getting to the point where we're consistent, right? We're consistent in terms of what we're looking for, consistent in terms of the trades, consistent in terms of the outcome, consistent in terms of the profitability. It's all coming together, and it's not a single day process, right? We have somebody here today that's just learning, all right? Why is it still on there? So delayed. Just learning pretty much what these candlesticks are. Like she's a newbie. Don't know much about trading, right? Just that she wants to be involved because this is where the money game is played. But it doesn't matter where you are, right? You just have to continue to show up each and every day, just aiming to be 1% better. Not even 2%, just 1% better each and every day. By showing up today and her learning the anatomy of a candlesticks and potentially the swing points, right? Swing highs and swing lows. She's 1% better than she was yesterday. And she just have to keep showing up each and every day. And eventually she'll get to this level, right? And even more, right? She'll get to this level and even more. It's just all about showing up. All about showing up. Keep taking small steps in the right directions, right? Eventually we'll get to our destination and where we're going here, which is to the 1% club. Never lose sight of that, all right? We're officially, not officially, I think we're making it into the 10% club. We're getting there to the 10% club. Once we establish ourselves in the 10% club, right, the goal is to then fast track our way to the 1% club, right? From 10 to 1 is pretty much you're closer to 1 than you are from 90, right? So yeah, ending another amazing. I'm a rumbler tumbler. You already know that. I like to rumble. I like to run my trap. And ended another amazing week here at I'm the Trader Capital. All right, It's only up from here. It's only up from here. Yeah, solid week. I have no words. I'm just in awe, right? From where I started to where I am today. I'm just so happy to the old me for not giving up on myself, for just pushing through the heartache, pushing through the losses, pushing through not understanding what's happening, pushing through the stagnation or just feeling like I'm not getting anywhere, nothing is happening, nothing is working, and just not letting outside influences, outside pressure that I used to put on myself just impacting me and just quitting this whole thing, because 90% of us actually fail here, right? And it's a shame, because this is the game, this is the money game, this, and it's a tough one too, right? It's not an easy battle, it's a tough one. It's about overcoming yourself, right? Once you overcome yourself and your habits, right? Because these candlesticks, they're mirrors. They show you who you are deep down to your core. That's what these candlesticks show you, who you are. And if you can't overcome the person that you are, all your negative attributes, if you can't overcome that, right, you're never going to overcome the markets, right? Because you never really master the market. It's about mastering yourself, right? And putting limits and boundaries on yourself so you don't overtrade, you don't have fear and greed, which is the number one killer here. Okay, but yeah, anyway, enough from me. I'm done. It was the last trading session of the week, so I just kind of wanted to go on a little bit and just rumble a little bit and just end it on a nice note. Solid week here. Solid week. For me, what this week has taught me is my discipline in knowing when not to trade. When not to trade, because I've been burned so much times that, like, I'm starting to, like, are you gonna continue to keep doing this to yourself, or are you gonna learn? Right? Are you gonna learn? It's about data collecting and adjusting based on the data that the market is giving you, right? The market is ever changing, ever evolving, so we need to be ever changing, ever evolving with the data that we're getting back. And being a day trader, I'm getting back so much information, right? Every day I'm getting different information about the market condition, and it's just I'm adapting to it. Anyway, enough of my rumbling. Let's wrap this bitch up in a nice fucking bow and get the fuck up on out of here and go enjoy the rest of our day. Like I said, I'm not right now. I'm not sure if I'll be trading PM session. I'm definitely not trading lunch session. PM session, we'll see what post 2 o'clock is saying, post opening range, and if it's clean, if it's nice, and I'm in front of the charts and I can see it, don't hold me to it. I'll do it. I'll jump in there. But let's wrap this bitch up. What a fucking week, though. Before we wrap up, I want to leave. There was a time that I would fin and lost. Even on, I didn't really know why. On losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 AM. Kickoff once again at 9:15 AM. Is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.